If you've been following the market, you know it's a roller coaster of highs and lows, booms and busts. But what if I told you that by looking back, we can get a glimpse of what's probably to come in the future? That's right, we're going to analyze past downturns, identify patterns, and see if history is going to repeat itself again. So grab your notepads, because whether you're a real estate investor, a homeowner, or just real estate curious, this video is going to be super important to let you know what's likely to come and what you should do about it. Let's get into it. So the first thing we got to do is identify the historical patterns. A boom is always followed by a bust, and a bust is always followed by a boom. Not rocket science, but let's take a look at 2002. This was the bottom after the dot-com bubble, and it rose all the way up until 2008, and we all know what happened then, and it crashed. And then we fast forward over to 2012, which was the bottom of the aftermath of the 2008 recession, and it rode itself all the way up until 2022. Here we are in 2024, and it's expected for the real estate market specifically that we are now at the bottom. With interest rate cuts just around the corner, historically, we always know what happens to real estate when cuts start to get lowered. So it's highly theorized that right now we are most likely at the bottom or very close to the bottom of the real estate market. And we know what follows after a bust. So we have a good idea of what's coming. Now, before we get into that, I know what you're thinking. But Matt, if we're going to be going into a recession soon, like the media is saying, like Jerome Powell is saying, like everybody is saying, how can the real estate market possibly go up if everybody's losing their jobs and we're in a recession? This is a great question. And here's the thing that nobody really understands because they're not looking closely at the data like we do. An economic recession doesn't always mean a real estate correction at the exact same time. In fact, they almost never align. Now, let me give you a brief review on history and show you how this never happens. In 1989, we had Black Monday. This is when the stock market obliterated itself and crashed so much in one day, leading to a recession in the 90s. Now, this was an economic recession that definitely was slow. Finding jobs was hard. This was a rough time. But if we look at real estate values, what happened during this time was a whole lot of nothing. Real estate just kind of puttered along, and this is specifically for quality areas. I'm not talking about some random small town in Montana or Utah. I'm talking about quality cities and suburbs around those cities. Boston, New York, Chicago, Toronto, Vancouver, San Francisco, all these kind of major cities. The real estate markets kind of did a whole lot of nothing. They just kind of puttered along, held their value, maybe went up 1%, 2%, 3% appreciation every single year. The real estate market kind of did nothing, even though the economy was real tough. Now, fast forward to the dot-com bubble. 2000, stock market in tech specifically just crashed like crazy. The economy was terrified. Stock market was at all-time lows. The real estate market in the year 2000 kind of did a lot of nothing. 2001, 2002, 2003, real estate just went up and up and up at a slow pace, a normal 5 to 7% appreciation in most major cities. Real estate didn't care about the dot-com bubble. Fast forward to the 2008 Great Financial Crisis. Economic recession, massive, and real estate took a massive beating. Why though? That was a real estate specific recession. That was a banking recession due to so much fraud in the real estate industry. So yes, real estate in that time got obliterated in the US only. Let me make that very clear. Me as a Canadian in Southern Ontario, Canada did nothing, dude. We just rocked on. The real estate market in Canada didn't even flinch at the 2008 specific recession. That was an American mostly recession. But yes, in America, real estate and the economy at the same time got obliterated. Now, fast forward to the pandemic, right? The whole world shut down. Nobody's working. It was crazy. Economic recession, technically, even though it was only for like a month, but it is a recession. Real estate did nothing. Values held during that 1 to 2 months of scary times, and then we know what happened to real estate after that. It just rocketed. Now, what happened in 2023 when the government started raising interest rates? Real estate in a lot of areas got a good correction. In my local areas of just around Toronto, 15, 20% drop in value and prices. That's Canada, though. Canada got hit pretty hard from that. In America, quality cities, Houston, Texas, right? Other Texas, Austin, Texas, Florida, not so bad, about 10 to 15%, although Austin, Texas now is getting obliterated. I don't know why, but that's for them. But they're getting hit hard. But most major cities in America have only felt about a 10 to 15% drop in values. Now, that happened without an economic recession. So far, the economy has been good. So far, most people are holding their jobs. Although we know now with leading indicators, with live data, Google laying off 12,000 employees, the tech industry alone laying off 50,000 workers from January 1st to the time I'm making this video, about end of March in 2024. 50,000 employees alone in the tech industry have been laid off. So we know what's coming to manufacturing, to construction. We know what's coming for the economy in America. How bad is it going to be? We don't know. We're going to find that out. But what I'm saying is we just had a real estate correction. Now, for all the doomsday people on here hoping and praying for real estate to come down, do you honestly expect another 10 to 15 to 20% correction when we know for a fact governments around the world in G7 countries are just months away from lowering interest rates because the writing is on the wall. We got Canada in a recession, UK in a recession, Germany in a recession, Australia in a recession. The US is teetering on a recession. They're not there yet, but we know with live data what's coming. We're about to enter an economic recession, that is for sure. But what happens when we enter an economic recession? The governments lower rates quickly to stimulate the economy. And by the way, guys, never in modern history since the 70s to now, when the banks have raised rates this high, have they held them high for years. It's never happened. They come down generally just as fast as they came up every single time. So when you got Jerome Powell and Tiff Macklem in Canada saying, we're going to hold rates higher for longer. And when we start lowering rates, we're just going to do a little bit, and then we're going to hold. Maybe this time it's true. But every other time in history, that was a lie. Every single time. When they start cutting, they cut big because shit starts breaking and they realize, oh shit, we overdid it. Now we got to stimulate quick. But we'll see. Time will tell. We're going to see what's going to happen. But when it comes to the real estate market specifically, values have been holding so well during the highest interest rate cycle ever in the past 40 years. And real estate took a hit, sure, 10, 15, 20%, depending where you are. But with what just happened, economists were expecting 30, 40, 50% corrections in real estate, and it didn't happen. Why? Because we have so many other socioeconomic factors like massive population growth. We have immigrants coming into Canada and America like crazy, which is great for the economy, not so great for the real estate market because we don't have enough houses. We're not building enough. Boomers are staying in their houses longer. Millennials are a giant generation, all coming of age at the same time, and they all want to buy homes. When you put all of those factors together, what that means is low supply of houses. We don't have enough houses. So how do you expect housing to go down a lot when we don't have enough houses? People are still fighting for houses. In my local area of Southern Ontario, Canada, bidding wars are back like crazy. I just listed one of our flips a couple days ago, held offers. I got 14 offers. That is madness. So we got that going on, and we know just months from now, we're going to start lowering rates, especially in Canada, the UK, Australia, the USA, maybe September, maybe October. Okay, fine, whatever. That's 4 or 5 months away from now. What do you think is going to happen to all the millennials and the Gen Zs and the Gen Xers sitting on the sidelines who are waiting for rates to come down? As soon as that first cut happens, holy shit. They're all going to be running to the real estate market, even more buyers with the same low supply. So you really expect housing to take a beating? Now, on that long rant, I know what you're thinking, which is the point I started to make is, what happens when everybody starts losing their jobs like you're saying? Well, here's the thing, and it's going to happen. Where the most job losses are going to happen is lower middle class and the lower class, which usually means low-level, low-entry jobs, the easy shit, the bricklayer laborers, the laborers on the construction sites, the helpers at the photography firm, whatever, the first-year intern at the law firm, okay, whatever. These people are going to get kicked off. But here's the thing. Those low-level people, lower class and lower middle class, they weren't buying real estate anyway. They weren't able to qualify. They weren't making enough money. These are all renters. So when everybody at the low level gets the boot, which is going to be happening more and more coming up, it's not really going to affect the housing market too much because they were never home buyers anyway. The middle class and the middle upper class especially, while they may lose their jobs, those people tend to have more skills, more qualifications. They'll find another job. Maybe not as high, maybe even higher, but they'll find another job. They're not going to lose their house under them. They're not going to lose all their income forever. They're going to find most likely another comparable job. So they'll still be in the market to buy a house. This is what happens in an economic recession, especially a mild recession, which is what we're predicted to have. And as I've shown you in the past throughout history, when we have an economic recession, it usually, most often, doesn't align exactly with a real estate recession. So, sorry to bust your bubble, but the idea of having another 2008 apocalypse across the world, not predicted to happen this time. Maybe the next recession, maybe in 2028, 2029, 2030, whenever the next one comes, that one, for what we're seeing, is probably going to be a fairly nasty one. The government debt is out of control. Everything's out of control. But right now, when the bank's just about to start stimulating the economy and running those money printers again, hard to see a crazy recession, especially since this recession has been the most predicted and eyes on recession ever in history. Everybody's been forecasting a recession literally since 2022, 2023. Everybody's been waiting for it, anticipating it. It's the most anticipated recession in history. Whenever you have a crazy 2000 apocalypse, it's usually a black swan. Nobody saw it coming. It came out of nowhere. This one has been so anticipated. People have been getting ready and buckling down, saving some money, putting it over here. It's just hard to see that this recession is going to be a nasty one. So what's coming? What's expected to happen with all that we know? Well, one thing we know for sure is interest rates are going to be lowered for sure in 2024, especially across most G7 countries. So we can only assume that the real estate markets in those countries are going to start going up. This is the bottom, guys. This is it. We just had the real estate recession, especially in Canada. If you're a Canadian watching this, where most of my viewers are, the bottom is over, bro. It's in. Real estate is going to go flat at worst and just boom at best from this day forward. In America, same kind of thing, little slower on the timeline, but realistically, real estate is at the bottom. Second thing we know is that the recession is likely coming for the economy. That's coming for sure. So if you're a lower middle class person with a low level job, you have low qualifications, you better get your head screwed on right, because things are about to change over the next 1 to 2 years. That is for sure. And last but not least, real estate prices are most likely to go up in major cities and surrounding those major cities. If you like this video, if you learned anything, smash the like button. It goes a long way to helping this channel grow, and I will see you in the next video.